Devan Murugan, good afternoon to you. The retailer Pick n Pay releasing results for sales during the lockdown period, and you're going to mine down on this one some interesting observations on consumer behaviour.
Yes, indeed, Jeremy. Pick n Pay reporting mixed fortunes today in its results for 6 months to end August. The group said it lost 2.8 billion rand in sales because of lockdown restrictions and temporary store closures. But its online store doubled sales growth, recording a 200% increase in active customers. Well, Pick n Pay CEO Richard Brasher joins us via Zoom. Richard, thanks indeed for talking to us. COVID-19 restrictions and safety measures costing you an estimated 2.8 billion rand in lost sales, but your share price is up 3% at midday. Doesn't look like shareholders are worried, are they?
Well, look, good afternoon, Devan. I think the shareholders see through the challenges that were faced by COVID and see the bright light underneath there. And I think that today's announcement is quite a strong set of results in unprecedented times. So I think, clearly we've been impacted by lockdown of tobacco, liquor, clothing and some of our G&D items. But as all of those start to reopen, I think the underlying health of the business is demonstrated in the ability to continue to trade up year on year. And we've taken some one-off costs in the first half. We're very confident about the business for the second half.
Were you surprised by the uptake of online sales? They're up 200% during the lockdown. And I see you've reached out to buy online grocery service bottles.
Yeah, I mean, we've been in the online business for a while now. I think we started it over 10 years ago. So, to be honest, we've been the first to sort of learn and find out about this. And in fairness, in my previous life, I had a lot of experience in the 90s and onwards. I mean, the reality is it's still a relatively modest part of South African grocery market. We happen to be the biggest, slightly the smallest, tallest dwarf in the class. But the truth is we believe that there has been a big uptake, obviously given the lockdown, given people's propensity to stay at home, and also the increased use of technology. And I think the advent of that is that we bought into one of our partners' bottles that had an online liquor app that we used. And we've expanded that now to be a full-on grocery app for both our liquor stores and our grocery stores. And we're delighted to welcome them into the Pick n Pay family.
Richard, I found this quite interesting, that you mentioned Pick n Pay stores these days are significantly smaller than they were, let's say, five years ago, down about 30% in terms of new stores. What's exactly happening here in terms of consumers?
Well, I think if you look at worldwide retail activity, we went through a stage of consumerism where stores got bigger and bigger and bigger and hypermarkets became more prevalent.
Yep. And
people wanted more and more and more range. And then what you've seen in probably the last decade now is the size of stores being a little bit tighter, the ranges being attenuated so they can give customers better value rather than just the broadest choice in the country. And also, obviously, the cost of electricity, the cost of rental rates and all of those other things need that we can actually be more efficient in terms of the way we run our businesses. I mean, for example, a decade ago when we had no centralised distribution, the truth is your warehouse was your store. Now we deliver every day to every store in the country, and therefore our requirement for space is less because we're more efficient. And also, as you get closer to where people live, rather than have to drive miles and miles for the store, the proximity means that people visit you more regularly, and therefore you can do that through a slightly tighter footprint. Nothing else about shrinking, apart from the size of the store and the costs and the prices.
I was saying, just lastly, on that evolution and how things are changing. I mean, you say you've removed about 70% of products characterized as old or slow-moving while rolling out more house brand items. What's that telling you about your consumers and what they're changing to?
Well, I think, like always, especially in a tough economic environment that we're facing, is customers take value out, not what the cost you put in. And therefore, sometimes having broader ranges and redundant stock that customers only buy very, very infrequently or not at all adds very little value. So I think what customers are demanding is that we run slightly tighter ranges, still but not 4 versions of exactly the same thing. So we're no longer real estate agents where we just stock everything that everyone makes. We have to help, with the help of customers and with the help of our data and our algorithms, we can ensure that we have the right range in the right store. And that means that we can offer better value in terms of lower prices and better promotions.
Richard Brasher, Pick n Pay CEO, thanks very much indeed for your time.